Yo, what is up, guys? It's Hunter here, back at you with another valuable video. I know I've been away for about 3 weeks now. January was really busy, a lot of things in the pipeline, a lot of things that we're doing. But I wanted to pop back in here and show you something that's really valuable, something that you can, mark off, check off your checklist during the day, especially when there's heavy news, especially when a heavy news week, NFP and FOMC, things like that. And this can help you tremendously. This can help you be patient, to wait and understand what they're doing when they're coming out with these events, right? So before I get started, what I want you to do is I want you to subscribe. I want you to like. I want you to comment in the section below, comment section below, and ask me what videos you want shot. I did have somebody reach out. I will have that shot for what you want shot, and go and join our Telegram. It's free. I'm gonna be dropping free charts in there. I'm gonna be amping it up pretty quickly, and pretty heavy in that chat. Just dropping some charts, dropping some trade ideas and stuff like that. And also, guys, if you want to get a hold of us quicker, go to our Instagram and you can ask me questions. You can send me charts. I'll grade them, things like that. So let's jump into the sauce. Hope everybody had a great holiday, great beginning of the year. Let me share my screen. Okay, cool. So this is one of the trades. This is US 30. Okay. I want you to really pay attention to, I have this marked up, okay, because I was watching it this morning. And then I'm going to toggle back and forth between the news event, Forex Factory, and this right here. So I want you to pay attention to what they did to price during New York. So you can see that they shoved price down, right? They're getting people to get into the market, sell, get everybody happy, give them a little bit of profit. And then you can see right here, and I knew this. I knew there wasn't going to be a lot of movement. So sometimes on these days, it's a little bit different. Sometimes they will consolidate a lot more, not much of a big movement, and then they'll rake the liquidity on the way that they want to take the liquidity and run the real move. So with that, you can see here at 1 o'clock they had FOMC that came out. Okay, at 1 o'clock they had multiple news today. You can see today on Wednesday they had PMI at 9. Okay, they had non-farm payroll at 7:15. Okay, and I'll show you those things. But reality right here, this is what they were waiting for, right? As you can see, they moved the market. You can see here this little wick here that was at 8:30. Okay, that's equity. And then you can see at 9, they started to shove the market down due to news. You can see that wick right there at 7:15. That wick right sharp up was news. Okay, it wasn't a lot of just really, really big movements. Now, when we got into 1 o'clock, you can see that they manipulated the price both ways, right? Up and then down. Okay, it kind of stayed in between. But you can kind of see that they hit the low right here. They hit the low of New York, right? So they grabbed liquidity. Okay, then you know for a fact if anybody was trading either way, let's just say if you had people that were selling, they were selling and they're still in here, they're about to get rated. Okay. If you got people that were already buying this and thinking, okay, here's manipulation, let's go ahead and grab the buy side liquidity. And you can see here, I got the order block drawn up here. And then you can see that fair value gap that we dropped into. You can see that US 30 dropped all the way back into the order block, filled that fair value gap here. And now this is what I want you to pay attention to. This is the sweet spot, sweet part of it. Okay, so look here. The FOMC statements and the fund rates come out, right, at 1 o'clock. And then right after that, the press conference comes out. So I'm sure that they engineered this just like they engineer liquidity here, right? So you can see that when this comes out, it's getting everybody to jump in the market. The market's moving. The smart money traders, retail traders, everybody that's not aware of that. Then you can see at what time? 1:30, which is 13:30. This is my time, Central Time. You can see that it rated it again, right? Getting people to short more, right? Taking the sell side, right? The buyers that were already in the market, boom, rated, and then boom, we take after all the sellers in the market, rating after the buy side liquidity. Okay. Now, what I want you to do is I want you to, when things like that happen, this should be the first platform. This should be the first thing that you look at in the morning. Because if you're trading without knowing what's ahead of you, you're shooting yourself in the foot. You should not be trading before news. It's not a good practice. You'll end up losing a lot more money. You're gonna be wondering why this is happening, why you're getting stopped out so quickly and stuff like that. Guys, this market is moved. The main two things about this market is money, liquidity, timing. That's it. If you know those two things, you should be fine. And the other things you put together, the other technical analysis. Okay. So I wanted to show you that, and you can see that it rated out both sides of liquidity. We had a high here that you know that there was buy stops here, buy stops here. And you can see as soon as we rated it, we pulled back in. Okay. Not giving nobody a free lunch. Okay. So what I wanted to show you too is SPX. Same thing. Okay. There was buy side liquidity there. Let's go to the higher time frame real quick. You can see here that we had that high right here. Okay. I had that marked up previous. Okay. Break down to the lower time frame. Same thing. Okay. We had an order block here. We had a fair value gap right there. Go back to 15. Cool. You can see that little small fair value gap here. This is 15-minute time frame, order block. We stab into it. Same thing. Same thing. This is what I want you guys to do. And you guys know if you watch ICT, this is called the power of three. Okay. You guys should know this. Okay. Accumulation right here. Accumulation. Manipulation. Distribution. Okay. That's what you need to know. That's what you need to follow. Accumulation, manipulation, distribution. That's how this market moves. Okay. And you want to be on the side of distribution. Okay. So let's see here. Okay. So now you can see that same thing. I'm in New York. You can see at 7:15, that was news. Okay. We had a little wick up. Okay. Then you can see here at 9 o'clock, you can see it acted weird right here. You had 8:30, equity didn't really do much. Usually it does. Okay. And usually when equity comes out, you know that the indices are going to move. They're going to manipulate. They didn't really do that. Why? Because they're waiting on this. They're waiting on this big mover right here. Okay. Then you can see at 9 o'clock, we had more news. Didn't really do much. We stayed inside, right? We went down a little bit. We pulled back in, and we are accumulating orders. Okay. Then you see, bam, 1 o'clock news comes out. Boom, snags sell side, right? And then you can tell that people were getting in for buys. The sellers were still in, right? They thinking this is resistance, right? This is just low hanging fruit. This buy side liquidity is just low hanging fruit. Okay. And then what happens next? 1:30 press conference. Runs out, snag, goes lower, snags the sell side again, induces people to go short. You have all these stop losses, the buy stops, everything, all the buy side, all the liquidity up here. And then boom, we snag into that fair value gap. And then boom, we start rating stops. Boom, boom, rating highs. Okay, boom, rating highs. All the way up. Boom, buy side liquidity. Boom, buy side liquidity. Boom, buy side liquidity. As we were rating the bottoms too as well. Sell side. So we were boxed in. So another thing, power of three. What is it? accumulation. All this was accumulating. Is accumulating people. All of that right there was accumulating orders to get people caught. And look what they did. They hit it both ways. Wham, wham. Whoever was stuck in the middle of this, buying or selling, did not get a free lunch. The people, the 95% of traders that are doing that are getting rated. The 1% or the 5%, whatever it is, the guys that are being patient and waiting for this manipulation to happen and then making an educational decision on get in the market, they're catching the good side of it, right? So I wanted to make a video on this because this is perfect trading. To me, I feel like that this was a very clear indication of what they were going to do. Very clear. Because they accumulated. They had a big move yesterday, okay, due to news. Accumulation, manipulation, see ya. Perfect. Perfect. Okay. So with that, I hope you got value out of that. You should be focused on these trade setups alone. It's really good. It's really good stuff. I don't know why my TDI is gone, but you can see. Let me just okay. So you can see that my TDI across the board. I use the TDI. But you can see that we had some good divergence, okay, through the time. So that gave you a more of a confluence to take the trade. Okay. So let's go higher. Let's go higher. Okay. And you can see where we're stinging into. This lonely fair value gap right there that we stung into. There's an order block right here. And then bam. Let's go after and start rating. Bam, bam, bam. Perfect. Perfect delivery right there. Perfect power of three trade. Okay. So with that, guys, I'm gonna stop my share. I just wanted to show you that. It's gonna be a really quick video. Now, guys, is every day gonna be like that? No, it's just not. It's just not how trading works. Some days you're gonna have to sit on your hands. But the thing of it is, what's gonna develop you in a great trader is for you to sit on your hands and wait for those perfect trade setups. This is the reason why I shoot so many videos on perfect trade setups, is because that's what's going to get you to the end result, is the perfect trade setups. The ones that you can sit there and know for a fact that they're going to hit your target. Okay. And then eventually you're going to get to a point in your trading where you're so experienced, then what's from there? You're going to start to scale. You're going to start to scale up on the trades. Your account's going to grow. You're going to get funded. Things like that, right? The thing of it is, guys, I told this to my students. Leave the emotional side, the emotions out of trading, right? Leave it out of trading. And the reason why I say that, you should not be emotional with trading at all. And here's the reason why, is because this is a probability game. So when you come to the market and you're looking for something, you should be focused on numbers. You should be focused on numbers, okay? So let's just say you have a 55 to 60% win rate. If you have them and you're able to extract 2 to 3 to 1s out of the market, you have no problem. You have no issue. Think about that. You have no issue. You're allowing the losses, you're allowing the hitting your stop loss to affect you, knowing that if you have that data, if you're doing trade assessments and you have that data, you went through a roadmap to get where you are, then you should be fine, right? Continue to do that. Do not deviate from that. Do not fix what's not broken, okay? So with that, guys, like I said, like and subscribe. If you want more, drop a comment. If you want a video shot, go hit me up on Instagram and ask me some questions, drop me some charts. Go join that Telegram because I will be posting there a lot. I know I haven't this month. I've been really busy with some things. But yeah, do all that, and I will see you guys on the next one. Peace. Keep pimping and dipping, guys. Peace.